today we got an interesting episode because if you know anything about Melanin Money, you know that we have a resident tax expert by the name of Carter Cofield. But today I'm swerving in his lane and I'm going to talk a little bit about how you can leverage the tax code to build wealth faster. So what's going on, family? Welcome back to another episode of Financial Freedom Fast Lane. And remember, the quicker you get to your dream life, the longer you get to live it. And I'm your host, George Achenpong. So let's get into it. Carter, don't take offense, man. I'm only talking about the tax code because I want to teach people how they can leverage it to build wealth faster. All right, let's get into it, especially with the new tax bill that just released. I got a special bonus for you as our last bullet point of the episode. All right, so first and foremost, when you create the right entity structure, it can be a game changer when it comes to saving you money on taxes. Why? Right? Because if you are eligible or in a position to set up an S corporation, right, you have the opportunity to save yourself significant amount of money on taxes, right? Because when you have an S corp, you have to set yourself up on payroll, right? Pay yourself a fair and reasonable salary, right? So then from there, you're going to be able to minimize the self-employment tax relative to the salary that you pay yourself, right? It doesn't mean that's the only money that you're going to be able to receive as the owner. You will be able to distribute some of that income, right? As owner's distributions and qualified dividends, which will be ultimately taxed at a lower rate. So by simply setting up your entity the right way, it can save you more money in taxes, which is going to put more money back in your pocket, which is going to allow you to save more money and build more wealth, right? So proper entity structure is the first lever that you can pull when it comes to leveraging the tax code to build wealth faster. All right, so the next thing that you can do when it comes to leveraging the tax code to build wealth faster is you can literally build wealth and save money on taxes at the same time. When you invest in qualified retirement accounts, you actually reduce your taxable income in that year. The money gets to grow tax-free and then will distribute on a tax-deferred basis. So the money is tax-deferred. So for example, if you make $100,000 and you sock away 20 grand into your 401k, that's going to decrease your tax liability. But the powerful part about that is you're decreasing your tax liability while building wealth at the same time, right? That money is directly going into a retirement account that is now going to build wealth on your behalf. A lot of times as business owners, people think that let me just spend every dollar I can. Let me spend, right? So that I can decrease my tax liability, not realizing that you can invest that money and save money on taxes. Another way that you can invest reduce your tax bill and build wealth at the same time is through real estate, which is arguably even better than investing in retirement accounts from a tax standpoint. Why? Because with real estate, you get to take advantage of a little thing called depreciation, right? So the IRS basically says, hey, if I have this cup that I bought, right? When I first bought it, it's not going to be as valuable as it was, right, 5 years ago. So the IRS will allow you to depreciate it, right? Because it knows that its useful life is dwindling the longer you own it, right? So imagine being able to depreciate an asset and as a result, get the tax benefit. But if you invested in real estate, you now own the asset, not to mention if it's a cash flow producing asset, now the depreciation is going to decrease your tax bill. Then you're also getting cash flow, right? So that depreciation is probably going to wipe out, right, the taxable income liability that you will be responsible for any of that cash flow that you're receiving. Very, very powerful stuff, right? Build wealth and save money on taxes at the same doggone time. All right, this next one is a little bit unique. So when you do philanthropic giving, when you give money to charity, give money to a foundation, whatever the case may be, right, you're going to get a tax deduction for that contribution. Now, on top of that, many people don't realize that you can amplify that by putting that money in something like a donor advised fund. And as a result of putting it in a donor advised fund, you essentially are now investing money that you plan to give away, right? But you get to then direct not only the investments that are inside the donor advised fund, but then who you want to gift that to, right? So you are essentially able to take money that you now are getting a tax deduction today for, invest that money for philanthropic purposes. Now that money is going to grow and it gives you even more money that you can give away. Now you might be saying, well, yeah, that's building wealth, but at the end of the day, you're giving the money away. So how's it really building wealth? Well, it just depends upon what you care about, what your values are. But for me to know that I had to stroke a check to the IRS, and instead of having to give it to Uncle Sam, I can find causes that I love and care about. I can then invest the money, right, in assets, then have those assets appreciate, and then be able to gift more money to that organization. That is a wealthy boss moves every day of the week and twice on Sunday, if you ask me. Now, last but certainly not least, is you have to understand the current up-to-date tax code and incentives that are currently available for taxpayers. Prime example, the new bill was just passed, and now we can go back to writing off vehicles 100%, or just bonus depreciation in general is back at 100%. So equipment for your business, vehicles, all that jazz, back at 100%. So imagine, right? You buy, let's say you're a rental car fleet owner, if you have a Turo business, right? You now can buy these cars, right? Get 100% tax deduction based upon making sure they meet the criteria to get that tax deduction. So you get the cash flow, you get the depreciation, right? You get to write off all the regular expenses, right? Because it's a vehicle that you need for this particular business. Then on top of that, right? Let's just assume it was a Tesla, right? You then can get EV tax credits as well. So just understanding the tax code can let you know, well, which investments do I want to make? Which purchases do I want to make relative to the deduction that I'm going to get, or the incentive or tax advantage that I'm going to get to take advantage of it, right? Money is a language, and the only way to win in this world financially is to speak it fluently. Guys, thank you so much for tuning in to another episode of Financial Freedom Fast Lane. And remember, the quicker you get to your dream life, the longer you get to live it. Freedom is for sale if you're willing to pay the price. Peace.